Today's episode is presented by Lodestar, the fee experts.
Hi, everyone. Welcome to this week's Lending Leaders. Have a great guest this week. Good friend, Allen Pollack, product innovator, board advisor, strategist, radio podcast co-host regarding mortgage technology. Allen, thanks so much for coming on.
Great to be here.
Your bio was so long I had to stumble through it. So a lot of interesting experience, especially in mortgage tech. So really excited to chat today. Would love to hear about what got you into the space and a little bit of a paraphrasing of the different enterprises you've been involved in over the years.
Yeah, well, first, great to be here. And I love that everybody's getting into these podcasts because one is they're quick content. You can kind of drag through them. On our podcast, Licking on Lending, we don't do the video. So you can listen online on your phone. And it's funny because I walk around conferences and you probably get the same thing. And you never know if you're talking to anybody, right? It could just be you and me talking, or if I'm giving like a technology segment, I'm just talking. And then suddenly at a conference, someone says, "Oh, I love what you said last week." And you're like, "Oh man, thanks for listening."
You have to remember
one
what
fan.
you said too.
I have one fan.
I have no idea what they're talking about.
No, it's good. So I love this. So
and,
like
podcast
you
hosts are always my favorite. Sorry.
Yeah.
I was gonna say podcast hosts are always my favorite guests. So
yeah. Like you and probably many others, mortgage, getting into mortgage was not something I planned to do. I wanted to be in the music industry and TV, and I was working at VH1 MTV. I had a great job. But working in those kind of environments, you can't start a family. So my soon-to-be wife at that time said, "Hey, we're either going to, get married and start a family, or you're going to work in the music industry." So I wound up switching, met this guy, and we used to call him the dollar man. He was only your friend if there was a dollar in it for him. And so I was building a mortgage pipeline tool for him. I was in the dot-com boom building websites and tools for anyone that had money that wanted to build a copy Expedia. People wanted to build like pet cemeteries, you name it. They wanted to build them. So anyways, he basically said, "Hey, I'm working at this mortgage company. They don't like the guy that this technology, they bought it out of bankruptcy court. And you can replace him. It's the job of a lifetime. You should take it. And you can work for my platform that you've been building. And I'll give you some equity in the company and you stop charging me because I'm getting you this amazing job." So anyways, I went, I did the interview. It was total mafia style. I went to an Italian restaurant. I sat at a big long table. The CEO showed up in a limousine. I was prepped ahead of time. The limousine driver stood in the corner of the room. He sits down, his giant Rolex, and he hands me like a little napkin. And he says, like, kind of write down what it is that, you're interested in. So we made a good deal.
I've never
into the mortgage
do
industry.
that to slide the napkin across the table.
Right?
Yeah.
Yeah.
You're going to say his lock was popping out too when the guy was sitting down.
Who knows?
Yeah.
But anyways, it worked out great. It was a great move for myself, my family, my career. Met some great people. And from there, we created our first software mortgage technology company called NYLEX, New York Loan Exchange. It's funny. It happened at almost the same time as the TV show Silicon Valley. So everything that happened in that TV show happened to us, almost to a T, to the point where our servers blew up. Theirs blew up in a garage, ours blew up in a data center, to the point where, we had money, someone stole money. Then someone tried to steal the company. We had bad deals being made. We made bad decisions. We hired good people bad. Anyways, in the end, you watch that TV show and you can relate so well. And I'm sure many of the folks,
show.
Many of the folks listening right now probably think the same. I've tried to find, by the way, something similar to binge watch. I haven't. Someone said, go watch Mr. Robot. And funny enough, last night I went and watched the first episode of Mr. Robot.
Okay.
And it was okay. I know it takes a few to get in there, but there's just no other like that. Anyways, so from there, we just met a lot of people. We survived through believe it or not, we didn't fire anyone. I didn't tell my wife I wasn't getting a paycheck. Some of us at the top of the food chain there, we just did everything we could to stay alive. We reinvented ourselves. We rebuilt our tech platform, and we made it. And eventually we merged with another company. We created LoanLogix after NYLEX. NYLEX eventually sold off to Optimal Blue. And then we sold LoanLogix and we did very well. It was longer than we thought to exit. Brought me to Florida, met a lot of other really great people. And And so that was a lot of fun. That's how I got in. Jim, I'm just going to throw it back over to you only because I don't know how you got into mortgage. And
Sure.
being on the vendor side, I started, by the way, we incubated inside of a lender as we built our mortgage tech company. So I got to be a loan officer. I had deals that blew up. I got trained by secondary, what they do. So I got an inside out kind of view. And somehow I still liked it. But anyways, how did you get in?
Yeah, I don't know how often I've had to say this on the podcast, so I appreciate it. So I grew up in a family-owned title company up in Rhode Island. So as a kid, I'd go into the title company. I remember when they had typewriters to type up policies. They're climbing on the filing cabinets for fun when I was, 8 years old. I had odd jobs for the company over the years, moving files where they had to keep files on record. I'd get a U-Haul truck, recruit a friend, do that during college. I was studying engineering in grad school in 2009. Got a call from my dad. They were adding a page to the HUD, and the idea of a good faith estimate was getting created. He's like, "Yeah, we need this like calculator. Can you code something for us?"
Yeah.
And I did over the winter break between semesters. That was January 1st, 2010. They were one of the few title companies that had a calculator at the time that allowed them to grow from being in 3 states to 33. They got some large bank clients, really grew because of that. It was a side job for me for a couple of years when I moved into New York, was working in kind of the legal technology industry. Then 2013 or so, wanted to change, didn't really like where I thought my trajectory was in my current job. Always interested in running a business. You can see behind me, these are just all family members who've run businesses. All 4 of my great grandfathers have run a business.
That's pretty cool.
So it's just in my blood. I was like, let's do this. How hard could it be? And then I proceeded to make every small business mistake imaginable. At that point. And then I had recruited our co-founder, Dave Spector, who was a college friend. I was 26 at the time. I had worked 2 years, 3 years maybe, in jobs outside of this. So I had no sales experience, very little technology experience. So it was just all learning the hard way, totally getting my ass kicked. And just slowly being able to iterate, had a lot of family support, being able to just have enough time to figure it all out. So that's why we have that title background. Yeah. And then we've pivoted from, instead of selling to title agents, we've sold to lenders. We've been integrated with Encompass now for about 8 years. That was really the turning point for us of figuring out, going to lenders, and how we can sell there.
Yeah, it's pretty cool. Actually, for those that don't know, there's a bobblehead of you. I saw it right before we started the show, over your right shoulder there. But
it is. Yeah.
I mean, once you have a bobblehead of yourself, you've made it, right? At that point,
apparently, I guess, yeah. So
there's no turning back.
Well, that's a good question for you too. At what point, I'm sure it's different per company, but especially the first one, what did it feel like, or what did you do when you were like, okay, we're here, we've made it, like we finally are profitable, or we're finally at a point where I feel confident? Like, does anything come to mind with that?
I mean, yeah, we always thought we've made it, but it was never enough. We grew, like when we built our pricing engine, there weren't any pricing engine. So Optimal Blue and us were head to head every day. If we had a small outage, or if the internet had an outage, customers were flopping between systems. It was really an interesting time. But we were doing everything from building servers, entering rates, and then even on top of that, we were doing sales support, implementations, and so there's a point where you need to grow. And we went quickly to, at least I think we had about 50 people. And at that point, you're kind of like, yeah, we've gotten bigger, we've made it, we can sustain ourselves, but you're still dealing every single day with new challenges. And so I don't know if you ever feel like you've made it. I think it's more about, you feel that you're sustaining and you're growing, and then the prize gets bigger. We wanted to exit our company so many times, and we tried once or twice, and it took, in the end, it took close to 15 years. It took a long time. We enjoyed the entire ride, but it took a while.
Yeah. Let's see that. I definitely can relate with the feeling like that goal isn't enough. I've hit a goal. My business partner and I, we talk, we're like, oh, well, that should have been higher, right? And you go on. But I always consider that a good thing, right? That's what drives you. I remember for me, there was definitely a point where it just felt like I wasn't spending my own money anymore.
So
that was kind of
that's
the success.
A good point.
Like I would, like we would go to conferences. I would either, if I was traveling, I'd be like, whose couch could I crash on? My business partner and I, we would just share a room. People ask, how did you celebrate being profitable? I said, we didn't share beds anymore. We actually got our own hotel rooms. That's it. Like that was success, right? So
I love it. That's great.
Yeah.
It's funny because I have 2 startups that I'm a part of right now. One of them it's interesting. Neither of them do we get paychecks from, right? We're putting our own time, sweat equity. Some of them we're putting our own money in. And so if I ask the question again, just focusing on just those 2 startups I'm a part of, I'd actually have almost the exact same response you just had, right? As soon as we can sleep in our own bed, that's something that's going to be very, very good.
Yeah, and so I think it's important to be able to enjoy the ride, right? And have those moments as you go, because everyone looks at the exit or being a publicly traded company or something like that. And that's just not realistic success.
I'm happy you brought that up.
Much all the cases.
Focusing on the exit actually makes it worse. If you focus on the exit, you start to get a lot of anxiety. You start to assume too many things. I think just take it for the ride. Enjoy it. There's these days, nobody wants to retire. You want to retire, but you don't, right? And you don't want to get a job as a greeter at Walmart or Lowe's. You want to have a job doing something good, whether it's advisory, consulting, or starting another company. Actually, one of the companies I do some advisory work for, they've got a couple folks in there that are exactly in that position, right? They don't need the paycheck. They want the paycheck, but they want to be busy. They want to do something. And so that's an interesting way to look at it.
Yeah, that's definitely how I view it. I have a business coach, and he works with something like 40 CEOs. And he had said, like, as long as I do this, I will never get old.
That's right.
I think he might be in his 60s. Yeah, he's like, this is just being able to do that and be connected to that is something that constantly keeps me.
Yeah. By the way, I mean,
learning and
once you've made it, you can get your own mug that has the college name of where your kids go. So I've got one daughter in Ole Miss. I've got a rising freshman that'll be in Ole Miss in September. And I've got a third daughter that is trying to go this weekend to Ole Miss for their cheer clinic. So, at that point, you think you've made it, you've made maybe good money, and then you start buying stuff like this.
Oh, it seems like it was an expensive mug. Yeah.
Sure was.
So we talked about looking backward and feeling like success, right? And now looking at these ventures, how do you see that? What do you see the landscape of the industry like going forward? I know we wanted to talk a little bit about the 5 to 10 year time frame of the different technologies in the industry, things happening. How do you kind of view that horizon?
Yeah, it's a good question. If you think about, it was digital transformation for so many years, right? Then COVID came along, and it was remote online notarizations runs. It was, we got to rush and get there, which we did. The problem was there was a lot of municipalities.
Then COVID ended, and now people don't care about runs anymore.
Then it went, then it went to e-signing, because e-signing wasn't ready during COVID. But the problem is the lenders and the technology is not all ready for it, or the lenders have other things to focus on. So when you read these things like Fannie Mae suggests these are the top tech things to think about in 24, or you read National Mortgage News, everybody's got great ideas. The reality is we're still focused on the full digital transformation, but more importantly, it's operational efficiency and automation. I don't want to use, I'll use the word AI, but AI is going to be slower to adopt. We talk about it on our podcast. But the reality is you can only do so much with it without the risk of data, right? You can't stick PII data in the cloud. And you need the technical chops. Right now, every lender's got 20, 30 vendors involved in the entire mortgage transaction. You have all these contracts. You've got all these integrations to worry about. Then you've got release notes. How do you even maintain or stay on top of all of that? You didn't sign up to be a technology company when you said, hey, I want to be a mortgage lender. And so with all that being said, I think operational efficiency, right? Where's their overlap? I know, and I'm on the vendor side too. I know a lot of vendors probably aren't going to be thrilled with my comment, but do we have more vendors than what we need, right? What vendors are true partners? And so I think this is the year where we start refocusing on what is it we have and what do we do with what we have. and how do we become more efficient?
And how do those vendors play nice?
Yeah. Then we can sprinkle
How's
in.
everything
That's a
connected?
huge one, by the way. Then we can sprinkle in all the great things like, how do we do something on our own? How do we bring some AI in? Some of the vendors will introduce some AI in certain areas, but at the end of the day, we got a clean house. I think that's what we're focused on in 24. Now you're a vendor, and you have an interesting tech stack. You have an interesting opportunity. Because the folks that you compete against are much bigger, more broad type of companies, and they're sometimes harder to deal with. Sometimes you get more than what you need. The relationship isn't always there because they're so much bigger. You're more of a boutique, and I don't. That's just the quickest word I can think of. But you're a smaller company, more personal relationship is what I'm guessing. You feel the same way on that side?
Yeah, I think one thing that's important, right? I started the company in 2013. From day one, we have been competing against solutions that people have given away for free.
Right.
That, and not only that, in some cases, some lenders, I would actively tell you that what we do, you should only do manually. If you're small enough, use templates, use other features. So it's weird in that one, there's things people get for free that in some cases work. In other cases, you're literally just competing against a manual process. And then certainly there are competitors like you mentioned, but I think it's, people often worry about competition, especially when you're starting a company and you want to find, that blue ocean where there's no competitors. Competitors aren't a bad thing, right? There's always going to be a status quo, and knowing where to benchmark yourself and knowing, why people are willing to pay for something that they could get a different version of for free is super important. And I think there's examples like that littered throughout people's buying habits, and also in the mortgage industry too. There's plenty of free solutions out there that people willingly pay money for a better
Did I lose you?
Upgraded solution to that.
Did you freeze the gym or just I froze?
I think I heard you. You were getting a little choppy, but we'll make sure we can cut this a little bit.
Oh, okay, good. So I'll start
just
back up
reframe
now.
a new. Okay,
yeah, go ahead.
Yeah, I was just going to frame a new question so we can kind of cut to that and find it.
Perfect.
This is around 18. It's around 18 minutes, so I'll let my team know. So, all right. So, Alan, you mentioned in what 2024 looks like, battening down the hatches, right? What does 2030 look like? What of these technologies do you think are going to change things? What is the role of mortgage companies going to look like, and what's going to be dramatically different in the next 6 years?
Wow. That's an interesting question. It's funny. I was talking to someone the other day who was looking ahead like that. And I think there's going to be a combination of let's stay down to earth. Let's not get too crazy, like with the Elon Musk brain chip or anything like that. But I think we'll definitely see some augmented reality stuff. But even coming down to earth, even more than that, I think we'll see a better mix of our data being used to help us, to assist us, rather than being so disconnected. I know a lot of people have tried to bridge the gap between banking and mortgage and personal finances and ways to bridge the gap and make our decisions better, help us be more informed, help our originators, the folks that are advising us, be more informed. And I think that's where we're focused. That's where we're going. I think there'll be a consolidation for sure of technology platforms. I don't think compliance is going away anytime soon, or regulation.
No.
So hopefully more technology and automation will get us there. But I think it's a more personalized experience. If you think about the millennials, they're already in the mortgage cycle. Either they've decided to wait, they've gotten some gift money, or they've just been great. But after that, we've got gig workers, right? We've got baby boomers that are still in their houses. We've got gig workers. We've got the next generation. We've got folks that only know mobile. They bought a laptop maybe because the school told them to. Otherwise, everything's been on their phone. And so those folks are always going to be digital first, which we say now, but it's really going to mean more later. They have access to things online that are going to continue to expand and mature. So it's going to be interesting. I don't know how much different will be other than the experience being more personalized. And some of us, we'll be old at that point, or older. We may not like it. I have Facebook. I post on Facebook once a year if I even post. I don't adopt to all that technology LinkedIn's very different. So we'll see. It's going to be fun. I will tell you, I worked on a project when I was at Fiserv. It was a digital human. It was before AI was a big thing. Some of it was on IBM Watson, but it was a company out of Australia. And what we did, and in New Zealand as well, we were bridging the gap between digital banking and mortgage, and we created a actual personalized experience. And we built a pilot and put it out in the market. We got to demo it in front of thousands of people, which was great. And in this digital human had empathy, so it can see you with your camera, and it had the ability to determine if you were confused, if you were happy, sad, and it tried to use empathy to talk to you. And so, it would say, hey, I know that you're interested in refinancing, but did you know that I can see you over these credit card balances? I also can help you save a lot of money. And so it walked through that whole process, and it was great. It was a lot of fun. It was a little bit before its time. Now it seems more relevant, and there are some people out there trying to do that today. So we'll see where we go, but I think that's the kind of experience we'll be looking at. I don't think, by the way, security incidents and fraud, and they're not going to go away anytime either. So we have to keep that in mind. So that may limit us on how far we can grow and how fast we can grow.
Yeah. But I think the centering of what that borrower experience is going to look like is a great answer. I really like that. And what the expectation is
I'll
going
tell
to
you,
be over
what's
the next
interesting
6 years.
Is that there are a number of people who are not in our industry, and they just want to all go and build like mortgage in a day. They want you to walk into a house, put an offer, and close. And I think those folks have a learning curve ahead of them.
Yeah, it's the same folks that 2 years ago thought blockchain was going to make title insurance irrelevant, right?
Right. Absolutely.
Just not gonna have who's talking about that now? Not too many people, right? So
yeah, and actually, there was one state or one municipality where they were only blockchain, or it was a pilot. Did that go off?
I think there were some pilots. I don't know what ended up happening. I think there were pilots in certain municipalities. It's so fragmented that's part of the challenge. And for me, I think that shiny ball technology is always going to be there, right? Of what can this disrupt, what's going to change. And I don't think that's where the significant changes are going to come from. That's going to be always going to be there. But I think for me, the thing I have my eye on probably most closely is what are the major players in a real estate transaction, a realtor, a loan officer, even a title agent. How are their roles going to change over the next 6 years? You kind of saw the first warning shot last year with the realtor, with the NAR ruling. The role of a realtor could be way different. A loan officer, the human LO comp, is probably one of the most expensive parts of the real estate transaction. So how are you going to, what are their roles going to be? And I think seeing how that changes, and is that aided by technology or other things, that's what's going to be interesting for me, because I think ultimately technology will certainly help with savings, but changing what the person's role in the technology and not paying a borrower, the buyer's agent, 3% of the purchase price is going to make up for all that. I think that's the cost of a mortgage in most cases. So it's that's what I think will be really interesting to see over the next few years.
Yeah, it's gonna be a fun ride.
Yeah,
there's no doubt about
absolutely. That's what keeps it exciting, right? We're kind of just built that way of what's the next thing. What's the next thing? I will
tell you one thing, and when you asked me the question about even next year, so right now I'm a board advisor for 2 companies. I've got 2 startups that I'm involved in. They're not in mortgage, so I got into healthcare and the music industry, which a lot of people say that once they're in, they can never get out. But I'm still in, and I also do some advisory and coaching to different folks, different companies. And what I've found is that there's still a high level of expectation. So lenders are expecting more out of tech vendors. They're expecting vendors to stand up and say like, hey, we do this, we don't do this. Here's the support you need. Here's really what we're doing. A lot of people have been sold a roadmap that never happened, or and I've been on the side of having to make the roadmap happen. But it's a time where we all just become honest with each other, and I think that's how we'll excel next year. And then I've done some work with recently some vendors where they've realized that relationship matters more. There are other vendors. There is a lot of competition. But you really need to focus on partnership, relationship. If you can partner instead of just be a vendor, and you've got some wiggle room in the relationship. It's not just so ironclad. They're going to depend on you. They're going to lean on you. You're going to become a part of their organization. And then it's an automatic win-win. So I think next year, when you orchestrate or figure out where, and this term's overused, but where all the deck chairs are going to go, when you've got that all figured out, you're going to figure out who your partners are. And then you're going to figure out a way to fine tune everything and do better. And that's, I think, what we're going to be seeing next year. By the way, Jim, I don't know about you, but I always love digital mortgage because there's always one or two kind of new entrants into the mortgage tech space, or something interesting we didn't think of, right? And I've seen a couple people introduce things that were before their time. What are your thoughts of next year, or if there's anything new and shiny that may come into focus?
I think for me, I think of new entrants. I was walking through MBA Annual this year, and I saw every other booth was data or AI, and some people had a better application than others, and some things made a lot of sense. And for me, and back of my head is who are the winners going to be here, right? Like I remember the same thing happening in I think 2014, 2015, right before TRID came in, where everyone knew, hey, there needs to be a portal for the real estate transaction. There needs to be a portal between the lender, the title agent, the borrower. And I was at one show, there were probably 15 portal vendors there. Maybe two, maybe three of those actually made it through. So for me, it was just like, okay, who's going to still be here? Not even a year from now, 3, 4, 5 years from now. So that's what I'm curious to see.
Yeah.
We're wrapping up here. So before I ask you, any final thoughts?
I was just gonna finish one thought on there. So walking around the conference, I also noticed the same thing. I also noticed there's a ton of vendors now that are doing doc processing and automated underwriting. It seems that a lot of people got their hands on good tech. It's easily accessible inside of AWS and Google nowadays as well, and a lot of people are focusing there. So, like you said, it's very interesting. Will the leaders stay the leaders? Will there be new entrants? Will it be something unique that no one thought of? Everyone's going to be focusing on sprinkling in something that they're going to call AI. So 24 will be interesting. I agree with you.
Yep. Yeah, it will be fun to see, and then maybe the market might do us some favors too. So you never know.
Yeah.
But
that'd be great.
So, Alan, last question. We always ask everyone, what is your lodestar? What is your guiding light? What gets you after 20, 25 years in this industry, going into your next venture, getting involved in other companies? What drives you for all of this?
Yeah, it's a great question. Actually, I didn't see that one coming. So it's two answers for me. Yeah, two answers for me. The first is I love being on the advisory and coaching side, because what happens is that I get to be a part of a lot of other people's success. And if I had some contribution into that, that's exciting. It's very rewarding each day when you share ideas and then people like them, and then you have the ability to help execute upon them. And when you start to see the outside opinion come in and you are somewhat aligned with what people thought, their expectations, it's great. I had a quote today, Jim, that I shared with somebody. Unspoken expectations are premeditated resentments. So that's a huge statement. And if you can think of whether you're the lender or the vendor, let's just talk about being the vendor for a moment. You set the right expectations, you'll have less resentment.
I've heard expectations breed resentment.
Absolutely. The other thing, my second part of your question rather, is I love being part of startups. So I've got, like I mentioned, I've got a startup in healthcare industry right now. We've spent almost a year putting it together, and we're finally getting to the point where we have products to put in the market and sell. It's a unique tech platform that we're going to bring to the mortgage industry, but it's in healthcare. But anyways, everything, from just the strategy and what we're going to do, how we do it, being able to spend an endless amount of hours just thinking of what we're going to do. And we've already made a few mistakes. We had a lot of trouble getting a good web designer, because we needed someone that can truly share and have empathy in what we do and relate that into what the website is. But anyways, I love the whole startup mindset. And so if I can be part of startups in, the next 20, 30 years, I'll be extremely happy. So hopefully you've got a similar
answer, just the energy.
Yeah, absolutely. It's a lot of fun.
Yeah, I think it's very, very similar for me, just seeing, I grew up around a lot of other business owners, a lot of
Yeah.
other entrepreneurs. That's why I have kind of the wall of those things behind me. And people weren't doing it because they had a cool app idea or they wanted a good work-life balance or anything like that. That was just their way of providing for their families,
Very
for
true.
creating jobs, right? And I think
Mm-hmm.
I've always been raised as, you know, one of the best things that you can do is help create well-paying, stable jobs for people. So for me, the ability to do that is by Lodestar, right? The ability to go out there and give people the opportunities. You're not giving people a job. You're just giving them the opportunity to grow and excel. So similar to you, just being a part of that growth and being able to help people and guide people in doing that is really cool to see.
Yeah, love it. And you got a bobblehead,
great.
right back.
Yeah, there you go. Well, that was from my sister. That was a wedding gift anyway. But
still great.
In case, Alan, thanks so much for coming on. Really
thanks,
appreciate
Jim.
it. Yep.
Yeah, I'll talk to you soon.
Thanks for listening, everyone.